What's up, everyone? Morning. Hope everyone's doing well. Happy Friday. It is the end of the week, and we have in the options room Lotto Friday today. That's going to be pretty interesting. What else we have? We have a lot of decent news that came out this morning. I was like, when did it come out? But this morning, and we got retail sales. We're going to talk about China. We're going to talk about retail sales. We're going to talk about this rally. So there's a decent bit to cover this morning. And again, end of the week, we don't want to be too active, I would say, right? It's not like make or break Friday. It's more so whatever you have throughout the week, just trade smaller, trade slower. And we got this recent pop. So let's talk about that first. This recent pop, right? We had a lot of stuck shorts at the lows. There was a lot of bearish flow, but even with all the news, the CPI, the inflation, the PPI that came out over this past week, we managed to rally, right? We managed to rally on a crappy bid. It was a short squeeze, some retail longs, and yeah, we can go up for sure. There could be some more upside, but realistically, there is a point where we capitulate that upside and there is going to be a decent sell. But until that happens, I think there's still a little more potential to keep these squeezers at bay and see some more, a little more upside, right? I don't think this is going to be long-lived upside. People are like calling bottoms yet again with all this data that's coming out. Let me check this because yesterday it was at 88%, right? 88% of a 100 basis point rate hike coming at the end of this month in approximately 12 days. That's not approximate, exactly 12 days. So let me just see what that looks like here. Oh, now it's dropped, right? Yesterday at one point it was at 88%. Right now it's at 51%. So it's very interesting. And I think Fed Bostic had a little to do with that. He was talking this morning. So we'll talk about the levels where I could see this thing going. But first things first, we came out with retail sales data, right? So the previous was negative 0.3%. Negative 0.3%. The forecast was 0.9. The actual was month over month 1%. So a very, very good consumer number, right? Now, obviously, you have to look at underlying like consumer debt and all that stuff, but realistically, consumer spending, right? Retail sales have been up month over month, which is very, very impressive. That helped a lot because the overall economic effect of that, right? The consumer spending, the retail sales themselves have a strong economic background, right? There's good aspects to this for strengthening this economy. Now, we've talked a lot about the weakness, inflation, all that stuff, and these retail sales themselves, they kind of play on the strong labor market front right now, right? Now, how effective is that? How far can they go? Only time will tell. But right now, those numbers, we have strong numbers from both jobs markets and the retail sales, which are doing fairly well in this quote unquote economic downturn in these conditions. So that's why a lot of people are still on the fence about the recessionary stuff because you're still getting economic data that's doing fairly well. We got a nice pop from that data that came out. Now, on the other hand, we have Bostic that comes out, and Bostic has been talking a lot, right? He's been talking throughout this morning, and retail sales actual year over year 8.4% versus the 8.09% to say. Bostic saying that 75 bips was a big move in the policy. Fed wants policy transition to be orderly. So he's still trying to talk things down, right? The whole aspect of this. Bullard's talking as well. Bullard, for the first time in a while, says the economy is continuing to do very well, right? U.S. labor markets are strong. And these things from these central bankers is fairly bullish, right? The strategy used by the Fed now has the greatest likelihood of success. Bostic also said that we're in a condition that we haven't experienced historically, so it's going to be a little more difficult. But they're talking this up, right? They see a few good data points. They're going to start talking this up to kind of mend a lot of the inflation data that came out, the potential for a 100 basis point hike, right? They're still doing their job of talking it down, but realistically, at some point, it's going to become the same conversation as transitory inflation, right? They were talking about transitory inflation for such a long time, and then at the end of the day, they were like, "Oh, well, it wasn't that transitory." Again, same thing with the soft landing. Oh, I guess it wasn't that soft of a landing. But as of now, on the short term, right, there's still that potential for a little more squeeze to the upside. That was the move that we saw last week and the week before. I thought there was a little more upside to come before we actually saw that sell. But I think they need to squeeze some more, get a few more trap shorts, let this thing run, get the trap longs in, and then get that larger move because there's still a lot of order flow that's telling us that there's a lot of downside into the end of the month. So we'll see how that shapes up. ECB as well. ECB is likely to hike by 25 bips in July and 50 by September. So that's very interesting. And then comes the talk about China, right? So In terms of global equities, right, Chinese stocks have rallied since the beginning of May as severe COVID-19 lockdowns came to an end. And some of that optimism could be running out now. However, as cracks appear in the world's second largest economy, their data mainly on Friday revealed that country that narrowly avoided a contraction in the second quarter, while investors continue to be rattled by latest developments in the real estate sector. Sorry. So gross domestic product, right, in Q2 in China grew about 0.4% year over year, missing that forecast 1%. So that's a slowdown in itself. And it made, oh geez, it made a sharp slowdown from 4.8% that notched in Q1, right? So a drastic difference there. And it was also the worst showing for China since it began the data series in 1992, right? Bearing a 6.9% contraction in the quarter after the pandemic began in Wuhan. Analysts now say that the official growth rate target is around 5.5% in 2022. Now, this might seem a lot, but remember, it is still a developing country in a sense. So it'll be harder to attain without ditching the strict zero COVID strategy, which can have knock-on effects for the country across the globe, right? So we also have some quotes here. China's economy has stood on the edge of falling into stagflation, although the worst is over of the May to June report, and you can rule out the possibility of a recession or 2 straight quarters of contraction. This is a chief economist at Daiichi Life Research Institute, and given the tame growth, China's government is likely to deploy economic stimulus measures from now on to the rev up its flagging growth. But hurdles are high for PBOC to cut interest rates further, as it would fan inflation, which has been kept relatively low at present. So there are some other worries, right? Things continue to look shaky in China's capital-starved property sector, which makes up nearly a quarter of the GDP. So that's pretty interesting by some estimates. A growing number of home buyers across the country are halting mortgage payments until developers resume construction of unfinished apartments, which the strike and fears of hefty write-downs weighing heavily on the bank stocks in China. So home prices growth in June stalled a bit on a monthly basis, while property investments contracted for the 4th straight month and sales slumped about nearly 20% in China. So if it's a quarter of the GDP and it's slowing that aggressively, nearly 20%, there is that worry. And we've been taught, like, this has been an issue in China about the real estate market for quite some time, and now it's actually starting to turn. So again, China's a massive economy, second world's largest economy. If that starts really downshifting, they're still not talking about 2 negative quarters, but realistically, like, in the States, we're probably going to get those 2 negative quarters. So we'll see probably this short squeeze continue. Right now, this market is zipping pretty hard. The SPY is pretty much 382s, right? 382, which is a pretty substantial run. On the futures, we have to watch this 3840 area. That's that distribution block that's going to try to sustain prices to the downside. We start ripping through that 3840, we really have that next push. Like I said, right, my target was still the mid 4,000s, right? What I mean by that is like 4,070-ish on the S&P before we start to see some kind of downturn at that point. But we have to get through a few distribution blocks. Today, I'm going to see if we can break through that 3840. I'm relatively bullish, right, on a decent bit of these tech names that did sell off, right, based on these inflation numbers throughout this week. But we'll see how that shapes up today. I'm still like looking for the longs. I'm still looking for a little push, especially after all those trap shorts at the low yesterday. They really got their asses handed to them. And luckily, I wasn't giga short until that low. So we'll see how that shapes up today. That's the main level I'm watching on the S&P futures, 3840. We'll see how that shapes up. The long flip, right? I think it's Friday. I think they're going to try to zip this throughout the day. We're going to watch the first half an hour naturally. The first half an hour, if they start really ripping us through these levels, just try to grab some longs and see what we do. But again, trade smaller. It is Friday. We don't have to make a week on a Friday. So again, come check us out at community.tradeproacademy.com if you want to chat with us in Discord. And we got futures and options masterclass on our website. So we'll see you guys next week. Let's see some of these comments. Yeah, I'm looking pretty long into that Fed, realistically. There's like no real bid, which is good because the short side is going to come out really aggressively. But I do like it into the Fed, right? I didn't think we dropped last week from those tops, or this week, whenever it was, from those tops. I thought we had a little more from this week, but I guess they needed to reload those longs a little lower, and that's okay. So hope you're all doing well. Am I trading 0 days? Yeah, I am. Today I'm gonna trade a few 0 days, like not many, not big size. Like I usually just risk about 20 to 30% of the weekly profit on Fridays. I'm on 0 days, and obviously they're calculated. It's not just like I'm boom, let me just click. Everything is calculated, and we cut risk at a certain point as well. So that's what I'm looking for today. I'm still looking for the bull side, and we'll see what we get. So we got to open these rooms, and we'll see you guys in there and next week. So enjoy the weekend. Take care and chat soon.